a deal or two as a syndicator without having much experience in capital raising, then you get very limited. And I think a lot of people are very uncomfortable in raising capital because you just don't know how to do it. Now, you had mentioned something about in the beginning, capital raising wasn't a strong point for you, but you had to learn to lean into it. What is, tell us about your early on experiences, where you're at now, and what would that roadmap look like for somebody to accomplish what you've been able to accomplish?
Yeah, it doesn't happen overnight. I mean, some people are super successful raising money right away. I mean, I sucked at it. On my first deal, I just raised 100,000. Luckily, we only had $1 million raise, and my partners on the deal raised a bit more than me. Um, I hadn't, because I hadn't done any deals before, I wasn't nurturing an email list, and that's something that you have to do on a consistent basis. Share the lessons that you've learned, educate people, but work that email list, keep growing it.
Welcome to the Stephen Lee Thomas Show, where we provide expert advice for real estate entrepreneurs. And I'm your host, Stephen Lee Thomas. And it wasn't that long ago that I was navigating the challenges of real estate investing, learning from my mistakes, and building the business I have today. I created this show to give you simple, actionable, step-by-step strategies to help you do the same. Each week, we bring you in-depth discussions with industry leaders and professionals who share their knowledge and practical tips. So sit back, take notes, and let's dive into today's episode. Welcome to the show. I'm your host, Stephen Lee Thomas, and today's guest has over $250 million in real estate they've acquired. They are a podcast host and a best-selling author of Best in Class, and they have a new book out, relatively new, I believe, and that is Invest Smart. I'd like to welcome to the show Gary Lipsky. How are you today, Gary?
Good. Thanks for having me, Stephen.
Absolutely. So actually, I see you've got Best in Class in the background there. But before we jump into that, can you give us a little bit of a background about your journey of how you got into the multifamily real estate space?
Yeah, I've always been an entrepreneur, never really worked for anyone else. And I started getting the bug for real estate. I would say around 2000, I was looking for a house for me and my wife, and we were having a baby soon, and we had no money, we had debt, and so we bought a house, and looked at it as a value add. We wanted to be in an up and coming community, opened up the kitchen area, moved washer dryer around, and converted my garage into an office, and I was paying $725 of rent to help cover our mortgage from the business. Little did I know, like that was the start of my path. And so looking for the next house when my kids were getting a little older to, for good schools and whatnot, and then turning that into a rental, I was on my way. But not until I sold the business at the end of 2016 did I get into real estate full time, had some money to play with, and started investing a little bit as an LP in other people's deals.
Gotcha. Okay. Um, uh, Interesting to hear your story because what was my catalyst for me to get into multifamily was my wife and I bought an old fixer-upper house. Um, Ended up living in it be while the construction was getting finished. My son was 3, my wife was pregnant. I was very busy in my corporate day job, and I was so over the trying to flip a house, and we were going to move out and rent it. Anyways, I found passive investing in multifamily along the way. So I was changing diapers and getting mailbox money, and I was like, "This is amazing." And then once my kids got a little bit older, and I was actually sleeping through the night, I'm like, I need to dig more into this, the active side of it. But I think that's a fantastic story there. So you mentioned you started as an LP. Now you currently live in California. Is that where you've been this whole time?
Yeah, yeah. I grew up in New Jersey, but I've been out in LA, I think 27 years now.
Okay. All right. So then talk to me a little bit more about the passive investing side. Did you start investing in California or were you investing someplace else?
So, my first investment was coincidentally Tucson, where I've done most of my deals. And I made some mistakes as an investor. Luckily, I ended up doing okay, but I didn't do enough due diligence on the first guy I invested with. He had a meetup, um, and a nice following. And so that's why I actually wrote my second book, was because to share some of the mistakes that I've made.
I was
And
gonna
then
ask. I think that second book probably aligns with this story very well.
yeah, yeah, and so many people too. And I also along the way, I'd say more recently, but I invested in some ground up development, and my friends were in on the deal. Um, and I just followed them, and I didn't do my own due diligence. Was like, shame on me. I should have known as an operator myself to like just not follow my friends. There were some red flags in there, and the operator was way over his head. He had made some good money for a friend of mine in the past, but he had taken on way too much. It was out of his comfort zone, and COVID hit, and he just couldn't take a punch. And he sunk the deal, unfortunately. So I've paid my price on a couple of investments as an LP. Certainly, I've done pretty good on a few, but really focused on my own investments at this time because I know I'd rather bet on myself than anyone else.
Yeah, I love that. I love that. Well, um, let's talk about your Invest Smart book. And you even mentioned the red flag. So it's Invest Smart Spotting Red Flags. Um, it sounds like a lot of that is really targeted towards, I'm going to say, the passive investors. But what are those red flags? I mean, help everybody that's going to be listening to this, help them avoid some bad deals.
Yeah, so the first half of the book is focused on the sponsor, and the second half is on the deal. So with a sponsor, you want to make sure that they're really focused. I see a lot of new GPs. They're chasing too many markets, too many asset classes, and you can't get good if you're doing so many different things. We focus on a couple markets, one asset class, and that allows us to be experts in that. You want to make sure they have a track record. Um, have they had any capital calls or delay or deals that have gone under? Now, having a capital call isn't the end of the world, but and if you do enough deals, you're probably going to get at least one. But have them talk through, if they're painting a rosy picture for everything, they haven't done enough deals or they're lying. You know, everyone, if you've done enough deals, you've had at least one that you've taken a punch on and probably some. But how you've gotten up and how you've dealt with it, that's what an investor should, wants to hear about because not every deal is a home run, and that's okay. No one
Hmm, hmm.
expects everyone to have home runs every single time. We also talk about having skin in the game. Are they investing in these deals too? And I know in the beginning it's really hard. You make your money on the sale, but if they have a lot of fees and they're not putting money in the deal, that's a red flag as well.
Do you have like a checklist or anything that you recommend people build as they're getting into these deals?
Yeah, you want data, like, for us, data. Like we're always tracking deals that we look at in our pipeline and underwrite. And as an investor, you should do that too. You should track your investments. How are they doing? You should look at deals that you didn't invest in because like anything, you need those reps. So you should be looking at a lot of different deals, and focus, like, also focus on a few different areas. Don't focus on all over the country because as an investor too, like you have to be um focused on a couple areas. If you're looking at all these different things, it's just going to be too much. You can't get good at that. So stay focused, and then as you get better and as you've been doing it for a while, then you can add more markets, more asset classes and whatnot. But certainly, just like a GP, as an LP, you should focus on a few different, focus, hone in on something, not on all different markets.
I think that's really, really, really great advice. And as you're saying that, I'm thinking to myself, there's Dallas Fort Worth is the market I'm most familiar with. Um, and you get outside of that. I mean, I've looked at Houston. I know it's different than Dallas Fort Worth. I've looked at Austin and San Antonio. I know they're different than Dallas and Fort Worth, but I honestly I can't tell you like this part of the metroplex, like this is a good area, this is a bad area, or this neighborhood. I can't tell you that. But I mean these areas you're investing in there, you turn the corner and it's a different demographic. And so I think that's a really, really, really good point is if people are chasing after things all over the place, they're going to spread themselves very thin, very quickly. Question for you. And this is something I learned the value of having a partner that's boots on the ground. What does that mean, and what value does that bring to a deal?
Certainly it's good. Like for us, we know there's plenty of good markets in Texas. We don't operate there. It's there's plenty of competition, Florida as well. So we want to be in a concentric circle and in a place that we can get to on a regular basis. Now, if I had a partner there, that's a whole nother story. Then maybe we can be more competitive because they can
Hmm.
visit properties right away. They have a much better understanding of the market. We focus on Arizona. I don't live there. I don't have a partner that lives there, but people on my team live in there in Phoenix, and
Hmm.
I'm there
Hmm.
once a month, visiting our properties, meeting with brokers. So you just want to have that consistent. Um,
Someone who's
uh,
not an absentee GP.
yep, absolutely, absolutely, because that's and if a GP has deals all over the country, they're not seeing the properties nearly as much as they should be.
Yeah, I agree. In the last couple of years, operations have been super important, which leads me to your best in class, which is very focused on the operational side of things. And so, what are the lessons you've learned that inspired you to author that book?
Yes. Yeah, I was very nervous writing that book. Like I'm like, who am I to write this book? I haven't done as many deals. It was, quite imposter syndrome. But finally, I came at it as from a mindset of, okay, this is going to be a great learning opportunity for me because I'm putting it on paper. So we just shared all the things that we were doing, um, from takeover all the way through disposition and put it on paper. And it made me be a better operator by putting it out there. And if I didn't know something for the book, I have my own podcast too. I had people come on the podcast and kind of use that for me to gain that knowledge as well.
What is if there's one thing you want someone to take away from that book, what is it?
It doesn't take a genius. Anyone can do it, but you've got to be consistent, you've got to be persistent, and you've got to track the data. So I gave you three things. Sorry.
Okay, all right. I appreciate that. Overachieving. I love it. The role of the property management company in asset management versus the role of the GP in asset management. Explain that to me.
Yeah, the property management company is huge, but if you're not managing them, they're only going to deliver as much as you manage them. And I'm not saying micromanage them, but you've got to have like ownership thinking from them because them going the extra mile, it could be millions of dollars in the investor's pocket because the difference between 90% occupied and 94% occupied is just it's all profit. It's not like your expenses really go up. You already have the people there. So that's where the real money is made. So you really got to stay on top of them. You've got to set really good expectations from the beginning. You've got to visit on a consistent basis. You've got to value their opinions. They're on the
Hmm.
site, but
Hmm.
you got to trust and verify though. Just because they say one thing, if you're not visiting that property sometimes, and I've caught people that were simply lying to us, saying they were doing one thing, and then we go on the site and we're like, well, that's not done and that's not done. So now, and you can certainly ask for pictures and whatnot, but if they know you're coming at any time, not to catch them doing something bad, but catching them doing something good, they're gonna buy in. They know that you're active. They're gonna work. They're gonna and work harder for you.
You said something. The property management company needs to have the ownership mindset. Explain that in more detail.
Yeah. Um, it's not just a 9 to 5. Like our staff will work late. They come on the weekend or night if they knew if it's for beneficial for the property and for our residents, because it's not just like make us money, make us money, make us money. We want to create win-win scenarios for our residents and for our investors. And our staff know that, and that is valuable to them too. We're not just trying to squeeze every last penny. We want to create value for our residents. And that's why we can increase rents and they stay longer at our properties, 23% longer than the national average because of what we're um, providing them. We're providing them more amenities, a place that they can feel proud of, a safe place, and we're fixing it up. So our residents see the value, our team sees the value, they're willing to go that extra mile.
With the there's an anomaly, maybe that's not the right word. There's a there's a misalignment just by design, maybe not design, but just kind of how everything works out. There's a misalignment between you're the owner versus the staff of the property. Let me clarify this, and I want to know if you've been able to overcome this or how you've overcome this, because it sounds like you've done some really good things. As an owner, you mentioned it, the difference between 90% occupied, 94% occupied, that's a big deal. Um, that means more revenue for you as the owner, the passive investors. It increases the value of the property. So not only are you getting more cash flow, but when you sell the property, there's more money go back to the investors. The staff that works at the property, they get paid to do a job, and they're going to be salary or hourly. So for them to push the property from 90 to 94, 95, 96%, a pat on the back or an attaboy, like it only goes so far. How do you inspire the teams at the property to hit that level of performance? Um, well, I'll just leave it right there. How do you inspire them to hit that level of performance where it's a win-win for everybody?
So part of that is being on the property on a consistent basis because I built a relationship with them. We have our weekly property calls and I'm there on a monthly basis. So I don't, the maintenance guys are never on the calls, but when I'm there, thank them, shake their hand. How many owners do that on a regular basis? Not many.
Mm-hmm.
Our staff, hey, how's it going? What are the struggles you're facing? It's a thankless job. Most times people say they're complaining about rent or something not getting fixed or whatnot. Very few residents are going up and saying, "Hey, thank you so much for doing this or that." So you've gotta take their viewpoint and make sure like you have empathy for them, you are helping them with their struggles, like if whatever it is, hey, we're a team together. I value your input. How can I help you in your job and make your life easier? So that's really important.
I'm gonna say this back to you a little bit different, and you said this even earlier, is that you take the time to listen to the people who are there working. It's not you come in and you're a dictator. You take the time to listen. So it sounds like you're a very empowering owner. You see your job as an owner is to make the people who work there as successful as possible. So you actually focus on making them be successful, and in turn, that makes everything work better, and the whole property and everything is a win at that point. Did I get that right?
Absolutely. So on Monday, it it hurt because I had to say goodbye to a property manager. She's been with me 3 years. She started as an assistant property manager. Then she went to one of my smaller sites and was a property manager. Then she went to a bigger site and so she's moved up a couple times. And she was managing my 199 unit property for a while. She got a promotion to a bigger property where she's going to make more money. And I was not happy letting her go, but I had to say, I appreciate all your hard work. I hate seeing you go, but I'm so proud of you. And
Uh-huh.
I hope we have a bigger property for you in the future.
Yeah. Yeah, that's awesome. You're selfishly like, "Oh, I don't want you to go because you're doing so great," but it's the right thing for you to do. Like this is the opportunity that is right for you at this moment. That shows the signs of a great leader at that point. So, kudos. I think anybody who gets to work with you and gets to see that from you, that's a pretty cool, inspiring leader from you. So I appreciate you doing that. Um, Now I want to move in a little bit different direction. We talked about investing in deals and your second book and how really to vet the deal and the partners. Super important. You've got a deal and you own it. Like how do you hone in on the asset management? And in my opinion, that's where like a lot of the real work is. I mean, it's exciting to go find a deal and close it, and but I think the real work is in the asset management and owning the property, because if you can't execute the business plan, then it's all for nothing. Um, so the other area that I'd like to speak about, and we chatted about this a little bit before the show, um, is capital raising. And you can get into a deal or two as a syndicator without having much experience in capital raising. But then you get very limited. And I think a lot of people are very uncomfortable in raising capital because you just don't know how to do it. And, I talk to a lot of people about it and they're like, I don't want to be salesy. I don't want to be a I just don't want to come across that way. Now, you had mentioned something about in the beginning, capital raising wasn't a strong point for you, but you had to learn to lean into it. What is, tell us about your early on experiences, where you're at now, and what would that roadmap look like for somebody to accomplish what you've been able to accomplish?
Yeah, it doesn't happen overnight. I mean, some people are super successful raising money right away. I mean, I sucked at it. On my first deal, I just raised 100,000. Luckily we only had $1 million raise, and my partners on the deal raised a bit more than me. Um, I hadn't, because I hadn't done any deals before, I wasn't nurturing an email list, like and that's something that you have to do on a consistent basis. Share the lessons that you've learned, educate people, but work that email list, keep growing it on a consistent basis. If you're not nurturing, they're not going to be ready when you have a deal. And then just talk about what you're doing. I play volleyball, I play basketball, and it's not like I'm not pitching anyone, but eventually I'm the guy that they could talk about real estate with. And so when someone's interested, they just let me know and say, hey, what we have a next deal, let me know. And maybe they come in on the third deal that I do, or the fifth deal, or the ninth deal. It's a long game. So play the long game. When investors are making money on your deals, when you're delivering, it just they'll invest that money next time. They'll bring a friend typically. It just
Hmm.
grows organically. We do a lot of different things, but the best way really is delivering good deals and referrals from that. That's the best way because those referrals are just ready to come in. They trust you. They've heard from a friend. Certainly, we want them to do their own due diligence as well. I mean that's what the book is about. Just because a friend's in a deal doesn't mean you shouldn't do your own due diligence, but that is the best way to grow it over time. And I think for a lot of people, they've gotten burned being a middleman. And if you're just a capital raiser and not part of the syndication team, the
Hmm.
operation team, you really got to know the deal. You really got to underwrite. And I've had people that have done a good job that I was like, oh, that was really impressive. You really done a thorough um, due diligence on me. And some people, just completely trusted me, which I appreciate, but they should do more due diligence on me if they're gonna partner with me.
The first conversation somebody has in trying to raise capital if you were going to coach somebody through that, what would you tell them that conversation should look like?
And people have heard this time and time again. All you can do is share the opportunity. You can't sell. And so if it's not right for them, then they're missing out, and so be it. But all you can do is share the opportunity. These are the things I like about the deal. This is why I'm investing in it. Um, and get their feedback. What do you like about the deal? What do you not like about the deal? But if you are like if you have to sell, that's a bad place to be.
You're talking sell,
Because
not like sell the property, but if you're like getting on a call and you're like sale, 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 like I got a deal, like,
right,
hey, you want to join? You're talking like
yeah,
I got to get people in. That's what you're
yeah,
talking about when you say sale, right? Okay.
exactly. Just educate and the people that want us will get in. Don't oversell. We love to under promise and over deliver. That's a great place to be in because that's what investors want. If you're overselling, and I've seen it happen right in front of my face, I've seen other people do that. Um, it's just hard to deliver on that, and investors are going to be disappointed. So you're much better off under promising and over delivering.
You mentioned nurturing an email list. There's two things I want to go into about that. Is number one, how does one go about developing an email list?
Yeah, so you can reach out to everyone you know and say, "Hey, I've got this. I'm going to be putting out an email. Maybe it's once or twice a month. Let them know. Would you like to see my deals and any education? Let them opt
Mhm.
in, and put it on your website for people to opt in. Um, you want to keep bringing people in to that email list. And they could be on for 5 years and not invest, but maybe they tell a friend like, hey, I've never invested with them, but maybe you might be interested in. People are always watching. Like we have a pretty big email list, and only a fraction invest, but when that person's ready, and maybe they never will be.
Mhm.
But I've got enough people on that email list to fill up a deal.
So your social media might be part of it where you have to get over the this is weird and uncomfortable and awkward for me to put some of the stuff on social media. But put it out there. I love what you say, don't oversell it. Just talk about it. Talk about what you're doing and what your role is there. And I couldn't agree with you more. People watch you. They might not like your posts, they might not comment on them, but there'll be people I haven't seen in years that I'm friends with somewhere on social media, and I see them and they're like, hey, how's your real estate stuff going? And then all of a sudden it opens a door for a conversation. So I totally agree with you there. So you go
One
ahead,
more
go ahead.
thing. With that kid, when you called on me in class, I would turn beet red. Like I would like, oh my God, like I was so fearful. And so over time, I've just gotten better at it. I mean, I pushed myself to get out of my comfort zone out of necessity. So just because you tell yourself you're not good at it or you don't like it, I've been there. But over time, you get a little bit better and a little bit more comfortable. And so you don't have to be a superstar at it from the beginning or ever. Like I wouldn't ever say I'm a superstar at it, but I've gotten better over time, and the more reps I have, I just get better and better at it, more comfortable.
Yeah, the more reps, I love that. It's like taking the shots, it's putting in the time to do it and being uncomfortable, and being okay with being uncomfortable with getting there. So that would be just start talking about it and then have an opt-in someplace for people to opt in. You also mentioned if you have an existing network, it's okay to reach out to them. You don't have to shove all of them into that email. You can say, hey, if you'd like to learn more, allow them to opt into it. So that's getting people onto an email list. And the second thing you said was nurturing. What does nurturing look like for an email database?
So it's not just sending an email when you have a deal, because that could be 3 months, 6 months, a year. Who knows how long it takes to get a deal. You've got to be consistent. So whether it's once a month. We're probably like twice a month now for the last couple of years. But just educate them. What are you seeing? Your underwriting deals. What does that look like? Where are you underwriting deals? Tell me about the cities that you're focused on or the types of deals. All you're doing is providing education. You go to a conference. What did you learn? Um, those are the stuff because there's always someone that's a level or two below you that wants to learn. So just share your experiences and because you could want to stay top of mind. It's not, hey, I got a deal. And I know some people that do that. They're like, oh, I just pick up my phone and call 20 people and I get some big checks when I have a deal. And I'm like, dang, that's got to be really hard. You've got to grow out of that. You've got to build that network. Um, and let people know, what you like I said, what you're doing.
I'm going to say it's back to you a little bit different. The time to be raising capital is not when you have a deal, but long before you've ever have a deal, right?
Absolutely.
What type of education do you provide? So there's nurturing, sending emails out. We talked about, some of the things you're working on. You're very big into making sure that if someone's going to invest in a deal, they need to know the things to look for. Do you provide in some of your emails you're sending out, do you provide some education to help those potential investors ask the right questions and feel more comfortable investing in a deal?
Oh, absolutely. Yeah, we want them um to know what to look for, whether they're investing with us or for someone else. And certainly there's a lot of operators that don't have experience that you shouldn't be investing with. So we're gonna tell them what to look for, what not to look for, um, whether it's on a deal basis, or whatever, because we want them to make good decisions.
And then you mentioned here organic growth, and that is you get a few people in, you go through a deal, and then you said next time they might bring a friend or they take some more of their money and invest that in. When is the right time to ask for referrals?
Um, if they like the deal, if the things are going well, don't be afraid to ask then. Well, particularly when you exit, like, hey, and if you've done well, ask them again. And most people aren't great with referrals for whatever reason, but there's your 10%,
Hmm.
um, that's your raving fans, which everyone really wants, to help grow your base. Those are the ones that can bring people. Like a guy I played basketball with, he brought in a friend. I'm like, who just signed paperwork on our portal with like and is investing a lot of money? And they're like, oh, he knows so and so. I'm like, dang. So like, I'm gonna take him out for a nice dinner. Thank you for the
Okay.
referral. Like, take care of that. The people that take care of you. You want to foster that. You want to when people invest with us the first time, we send them a nice box of different things. Thank you for your investment, and we have we'll include our now that we have the new book. Here's a book for yourself, or if you want to pass it to anyone like please do. You want to foster those, that referral basis.
I was going to ask you, like, what type of nurturing do you do for those people that have invested with you? And those are some of the things that you do. You found that, hey, you're in a deal. It's not just here's your monthly newsletters. You're actually going above and beyond and doing some additional nurturing there.
Yeah, I would say we've been hit and miss, quite honestly. We just had a meeting about it recently because we hadn't been as good as we should, but obviously calling them on their birthday, sending them a note, having swag, that you share. So we had a maybe I think early in the month we had a launch party. Now, certainly we can't get all of our investors there, but um, everyone that attended was on a rooftop bar, and we had food and drink for people. They all got a book, and just a cool crowd. Everyone was, mingling. We had, I don't know, 80 people there. We had some of our vendors help underwrite the event. So it it was a great way for our existing investors and any new investors that wanted to come. They can mingle and talk to people that have been investing with us for a while and learn about us, you know.
And spread the word and get to know each other a little bit better. I think that goes a long way. I think it also speaks to your character, going back to the way you treat the anybody that you're working with along the way, the things you do, and clearly it's made a difference. And even going back to trying to sell something, and you said, well, you don't sell anything, you present an opportunity. What you're trying to do is impact people's lives along the way. And it sounds like that's worked out well for you, is to be focused on that, the abundance mindset. I'm going to help out people along the way. This is working for me. I'm going to help people out and achieve those same things if they'd like to join me on this journey.
Yeah, this is a long game, and when you're taking people's money, I mean, that is serious business. People are trusting you, and it's a huge responsibility, and you have to take it that way.
How, as you've been doing this, I think you've been focused a lot on building your brand. Um, that's seeing you on social media, LinkedIn. You've got a couple of books there. That was probably a very conscious decision that you made at some point. I'm going to build a brand. That's my guess. Maybe you said no, no, it was very organic. But you also mentioned you had to lean in a lot to some of these things. How has that contributed to your success in this space of building that brand
Oh,
and just leaning in?
huge, huge. So, um, when we I did a couple deals, and we had talked about this asset management stuff. And I mean, I remember the exact point. We were flying back from a conference just before COVID, and we're like, well, we're really going to double down on this asset management stuff. So at that point, we committed, a partner and I committed to writing the book, to starting the podcast, and to doing a summit. And so it just helped me when you're all in, it's just a different energy when you really commit to it. And um yeah, it's allowed me to really develop a thought leadership platform, um and get asked to speak at many conferences, on other people's podcasts, and hone my skills as well. So, if I'm talking about it, I really need to hone my skills. It's not just me kind of working in the background. So if you make a conscious effort to build a brand, whatever your secret sauce is, like I just leaned on my operations experience. Everyone has a secret sauce, and lean into that. And when you do, it'll really help rocket fuel your business.
Gary, we've covered a lot of ground today, and I appreciate you going with me in those different areas. What's next for you in the investment journey?
Yeah, we've always focused on quality over quantity. We don't say, oh, we want $1 billion under asset management. Um, we want we're only as good as our last deal, so we're just focusing on quality in our radius. Have a really good team that we've been developing, and Kaizen, constant improvement. We can always get better. There's always learning opportunities. What can we do to maximize our NOI, to provide a better product for our residents, to provide a better experience for our investors? That's what we're focused on, and this will allow the growth will come from that.
Once again, I appreciate you taking the time to join me today. If somebody wants to learn more about you or connect with you, what's the best way for them to do that?
Yeah, you can go to breakofdaycapital.com. You could on there you could get our books, where they're also on Amazon. You could sign up for our newsletter. You've got our social media links and our podcast. So everything's on there, and I'm happy to connect.
Awesome. Gary, thank you so much. Again, I really appreciate it. Have a great day. Thanks for tuning in to the Stephen Lee Thomas Show today. And if you found value in today's episode, then I have a favor to ask you. Please share it with friends, family, and anyone who might benefit from the insights we shared today. Also, don't forget to subscribe and leave a review if you enjoyed the show. And if you aren't already part of our school community, then head on over to school.com/multifamily mastery hub and join today. And again, thanks for tuning in, and I look forward to connecting with you in our school community.